All right, what's up, YouTube? This is GMAC. We're going to go over liquidity. The first part of this was knowing the terms. You have to take the time to learn the language of ICT, like fair value gaps, order blocks, breaker blocks, liquidity, buy side, sell side, things of that nature. So if you don't know that, you need to, do some research, do your work, and do that. Then we talked about market structure, how important market structure is. Just reading swing highs, swing lows, things of that nature. But this we're going to go into liquidity. I'm on a 15-minute chart on the NASDAQ. We'll go over the last couple weeks. This is from um, Friday or Monday, the 1st or the 30th. So we'll go over the last couple weeks. But basically, liquidity is going to be the cornerstone for everything. If you don't have a raid, meaning sell side or buy side haven't been taken, you really don't have a trade or a high quality trade because you need liquidity. If you start looking at the market through the lens of where's the liquidity, what liquidity have we been taking, and things of that nature, your probabilities are going to go in your favor. It's really going to simplify your approach instead of just trading every little thing. So you just don't want to overcomplicate it. Basically, liquidity is going to tell you, are you bullish or are you bearish? Um, Price is always going to be moving from internal to external, and I'll go over that in just a little bit. But the higher time frame is where you want to spend most of your time. That's where your better ideas are going to come. And where I'm scalping, I'll look at the daily, the weekly, the daily, the 4 hour, but I'm going to go over this 15-minute. And basically the levels, you can see we had a new week opening gap down right here. And what time did we fill this gap in? New York session 2:15. So what I would do is I would plot out the highs, the Asia high and the Asia low. And as you can see right here, you want to see manipulation as well. So we took it out here. People think it's going to be a breakout to the downside. No, we come back up and then the move happened. What time? 9:30, right on the dot. So if you see this around your trading window, especially we've took out Asia's low, we have some manipulation, and then you find a PD array to get in here on a lower time frame, or you could use this gap uh, right here at 415. But you can see how violently we took out sell side. If you didn't get in that, then right here, okay, we took out sell side. Market structure shift to the upside. We took out a swing high right here with this placement. So we will be looking at a fair value gap in this region here to enter in, to get in probably the New York session or the afternoon session. Don't really want to trade the lunch hour, but the way you would get in here is if you saw the manipulation and you wanted to go down, or sell side's been taken, get on a lower time frame, enter in on the first fair value gap on the 1 minute chart that you see, and ride it up that way. I trade the macros, so I would have been in, somewhere in this candle or, you know, this candle. You want to put your stop under a swing low, so you can't be over leveraging. You can't be one or two contracts and needing, 40, 50 points of risk. So that's where you're going to start off, with maybe 5 micros here. And then after it reaches them out, after it goes up, move your stop up, add another, add. And there you go. But the biggest thing on liquidity, and I wish I could make better videos, I'm going to do it, is going to be time-based liquidity is going to be the most important thing. And that's going to be your previous session, like Asia high, Asia low, London high, London low. They're right on the dot right here. Same. And then we broke it at 7:15, 7:30. Then right here we're breaking it. New York open. Boom. Took out sell side. Well, you don't want to be going short anymore after all this has been taken out. So you want to be looking for a bullish idea here. But previous session, previous day, previous week, previous hour where I trade Asia. I'll go over that, how I look at the Asia session. I do it on an hourly basis. I'll look at the hourly highs, the hourly lows, and then I'll look at the previous session, like the last, from 3 to 4:30, the last 90 minutes of, or the last 2 hours or so of that session. But the way I do on a time frame is, let me reset this. I always start off on the weekly, see what the week's doing. These lines, I've just got the weeks out. See if we're in a PD array for the weekly, and lo and behold, look what we are. We've been bearish, but we are in, fair value gaps. How far we're going to go down, I don't know. But you see it wick down and start rejecting up. Okay, we're having a bullish week. All right. Go down to the daily. Try to see if we're in some kind of PD array down here. 856. Okay, we're not. And so we'll go to the daily. Then I go to the 4-hour. This is where most of my work is, on a 4-hour. Okay. Um, you know, this is the week opened, drop down, filled in the gap here. So we inverted it, come back down, come up. We're always going to go from internal liquidity to external. So meaning we're in this fair value gap here. More than likely, we are going to tear up this high here and see what we do inside this civvy, or look for this swing high to be hit up into, this area. But internal to external is, we're in a fair value gap is internal. External is going to be your swing high or your swing low. I mean, if we could reverse, and if we inverted this here, then you'd be looking for a play back up into it to go down to attack this swing low, this swing low. But that's how I'm looking at liquidity. It's just, I get on an hourly, see where the swing highs are, swing low. We took out this swing high. Where's the next swing high? Up here. So that on the 4-hour, that's what that was. So I'm looking for maybe a play up into here, then to see how it does. Just because it goes up there, don't mean that you just automatically sell. You got to get on a lower time frame. Look for a market maker model on a 1-minute chart, like liquidity being made on a 1-minute chart. Then if you were bearish, you would want to see it generate liquidity, move up into a civvy, take out buy side into a bearish PD array, and then shoot down. Vice versa for if you were bullish. We're always going to use market maker models when we are going to expand from internal range liquidity to external. And don't overcomplicate it. All a market maker model is they're all over the place. On a 1-minute chart, basically, look, we've took out sell side liquidity here, and we have broke this swing high with this placement. So we're looking for a retrace into the origin of the move, which would be from here. I would draw a fib, swing low to, well, we could say that to that swing high for our premium and discount. We're in a deep discount down here, and you can see, look at the bodies right here, respecting it right here. We're respecting it. We're respecting it. We get in right there, and all that is one push into a retrace into a fair value gap 2. Got a big one here. We didn't get a chance to get back in, but we'll look right here. We did right here, 1230, and again, this would be the best one, 130. That's the evening range, or the evening, the afternoon session, if I could speak. And you can see how they go. If you're bullish, fair value gap, boom, in. Right here would be a good one. Bodies respecting. And on a 5 minute, what that looks like is, let's see, go back a little bit. Same way here. We've took out the sell side. We have displaced upwards, making a fair value gap, and perfect. What time is it? Afternoon session, 110. We are respecting that. That would be a great. Don't let these wicks fool you. You want to put your stop at least on a 5 minute chart under candle 2, which would be here. You'd be fine. Preferably, if it's 1 minute chart, I'll do it under here, but that's a lot of risk to incur. So I would, once it got into here, I'd be in, 121. Stop here. That's still a lot. So that's where you got to refine it. The smaller your time frame, the better entry that you're going to get and the less risk you're going to have to incur. Looking at that now on a 5 minute chart, that is a lot of risk to incur. So I don't know. And same way here, 9:30 opens here. We're right here, probably 8:30. Yeah, 8:30 is a good time to trade. We're trading up into a fair value gap. But anyway, liquidity. I like looking at 15-minute pools. So like this right here, these two. Anytime you see pools of liquidity get broken, like Asia high is here. London low is, we'll say the 6 is here. As you can see, when we take out these levels, we are reversing. So it's just keeping that in mind is just always looking at liquidity, seeing where you're at, seeing previous session, previous day, previous week. We'll go to an hour here and reset it, and kind of see how it's running. Like this previous week's high is here. All these highs, we break it, and then we start breaking down, and then the lows are down here at 251, and that's about right here. And we're breaking sell side, and then what happens? Go back up, boom, down. But the moral of the story is internal to external. Okay, we gap down, like a fair value gap, back to internal. Then where we're going to go? Externals here. That's a swing low. We're going to take it out, and then we're going to go back to internal, then to external. Um, if that's one takeaway you get, it's going to be the way I look at liquidity is it's always moving from internal to external, meaning fair value gap to take out a swing low. If we shoot fair value gap to take out a swing low, fair value gap, take out a swing low, and just it continues all the way down until it gets, and until we get a bullish idea. But to know where you're going to be bullish and where you're going to be bearish is where you have to mark out, your sell side and your buy side for the day. And I'm going to give you a how I trade Asia here, because I'm kind of all over the place with this, but that's just the way it is. I'll get better with it. If you want one-on-one help, I can do that sort of thing too. But anyway, right here, Asia, we break down. Have we filled it in yet? What time do we fill it in? 7 o'clock. So I'll be looking at a PD array. Let's go on a 1 minute chart because that's where I spend a lot of my time after I mark out my levels. All right, we take out a high at 6:45, and right at 7 o'clock, we're going down. It's not showing me the bearish PD arrays. All right, well, it's kind of a raw video, just bear with me. But looking at it, on an hourly, you want to look at Did the previous hour get swept or are we displacing? Did it get swept or are we displacing? And that's kind of how I look at Asia. We are looking at the hourly candles. Then we're going to go down to the 15-minute and look and see what's going on. Down to the 5, down to the 1, and just looking for opportunities to get in during the macro is what I do. I'm kind of getting off topic here, but the moral of the story is for liquidity is to mark out your levels, previous week, previous day, previous session, and see how it reacts to that level. Just because it hits that level, don't mean you have to automatically, you know, jump in. But um, on an hourly chart, like the previous day, say we were trading. This is Tuesday, okay. Tuesday's high is here. Tuesday's low is is here. As soon as we take out Tuesday's low on Wednesday, look what happens during the session, during London session. Boom. We go up, we come back down, and then we take out Tuesday's high. So when we take out the previous day's low, then we want to reverse if we think it's going to go from there. What's our next target? If it takes out the previous day low, we're going to look at the previous day high, and it killed it right there. So I just want you to look at liquidity through the lens of previous week, previous day, previous session, maybe on a 15-minute chart, whatever chart that you trade with. Just mark out those levels, and after it hits those levels, see how it reacts. Okay, if it takes out Asia's low and it just sweeps it, maybe give it 20, 25 handles. If it goes beyond that, then it may be going to run some more. I would leave it alone. But say we take it out by about 20, 25 handles, and then we start making bullish order flow and bullish PD arrays, then you want to target Asia's high. Same for London. We take out London's low by 15 handles, 5 handles, 10, 20, something like that. Then we get on a lower time frame. We're disrespecting fair value gaps, bearish fair value gaps, and we're respecting bullish. Then you want to look at London's high. Week You can do the weekly range like that, daily, but liquidity is going to be, you need to figure out liquidity in your model. You have to have a liquidity raid before you have a trade. So we went over, you got to know the terms ICT. You need to look at market structure to see how bullish and bearish order flow look. And then you want to look at liquidity levels and see how they react to those levels. And then frame your trade idea around that. I know I got off topic a little bit, but I'm going to put this free course together, and then I'm going to get on school and put together a really good, more organized thing, like a course to sell, and have like a mentorship of 20 people. If anybody has made it this far that wants to join, I'm only going to take about 10 to 20 at a time because I'm going to take a lot of time with that person, with these people. But I do work, so it's going to be in the afternoon. I'm going to be predominantly focused on trading Asia. I'll have a Discord where you can trade with me if you like, and we can talk through everything. Have a couple calls a week, go over your trading plan, go over your ideas, what you want to do, and so forth. But I'll make a separate video about that. Um, and if nobody joins, it's fine. I don't care. I'm just going to offer it because I think I do have a lot of value to share to people, and I can relate to people because I'm just a blue collar guy from southeastern Kentucky who, if I can figure stuff like this out, and I'm still learning every day, I'm still learning, growing, developing, being a better risk manager, being a better, you know, sticking to my rules and all that. But I do have a lot of experience in this. I've looked at a lot of candles. I've looked at a lot of days, a lot of weeks. I made a lot of mistakes and learned from them. So if you take anything away from this, just you got to know the terms, market structure, know how to mark out swing high and swing lows, how to identify the right fair value gaps and order blocks, and look at liquidity. Base your trade around liquidity. About if you take sell side, then what are you going to look for? If it's time based, if it's the previous hour, whatever. then look for that opposite direction. You don't have to get the whole move. Get 20 points and cash in and turn it off. That's what I do. But I appreciate you if you stuck with me this long. A lot of rambling, but that's just the way it is. I appreciate you. God bless you. And until I see you next time, good luck trading.